University of Missouri Extension Ag economist Scott Brown is our cattle market analyst this week. The four largest beef exporters in the world are India, Brazil, Australia, and the United States. Three of those countries are or have been dealing with supply issues. Australia has faced smaller herds due to drought. Its exports this year are projected to be 25% lower than when it led the global beef trade in 2015. The current leader is India, but it'll reportedly ban the slaughter of water buffalo, the primary source of its meat shipments. And Brazil is, among other things, facing food safety concerns. Last week, the U.S. suspended imports of Brazilian fresh beef after rejecting 11% of that country's products since March. Meanwhile, the American herd is plentiful and foreign sales are up. Through the first 4 months of 2017, U.S. beef exports were 20% higher than the same time frame a year ago. We talked with Scott Tuesday afternoon about these international events and their impacts on U.S. trade, but we started by looking at recent movements in live and feeder cattle markets.
Well, I think when you look at where cattle prices have gone the last few weeks, a lot of that can be traced back to where we've seen boxed beef prices. Boxed beef prices have fallen for both choice and select boxed beef prices the last few weeks, and they've certainly fallen much faster than the slow rise we got as we entered 2017. And I think that has a lot to do with where cattle prices are going, and although we got a little strength early this week, we're already starting to see some weakness today. So I think we could be seeing lower cattle prices as we move ahead here for the next few weeks.
Is this dip substantial enough to stop producers from pulling animals forward?
Well, I do think we can potentially see some folks deciding to hold on to cattle a little longer before they go to slaughter. My concern about that is if we quit pulling forward like we have been of late and slaughter weights start to go up, we really exacerbate the problem of very large beef supplies coming in the latter half here of 2017. You know, we're already talking about beef production being up and record red meat production, by the way, in May of this year. You add weight to what's already larger slaughter numbers, and I think that certainly keeps a lot of pressure on cattle prices for the remainder of this year.
Latest Cattle on Feed report showed May placements up 12% from the previous year. Is that surprising or no?
I don't think that's really surprising. When you look at the pre-report estimates, the midpoint of that would have put placements up 10%, so a little higher than the midpoint of the average. I'll say when you look at, we were getting rid of calves, the last calves that might have been on wheat pasture. I also think we saw some calves coming from Mexico that helped push placements higher as well. And really, I think we saw a lot of cattle that penciled in the black for the first time in a long time that made feed yards decide now's the time to go ahead and fill those pens.
So we're seeing a lot of things happening internationally right now among the top four producers. Set aside the U.S. and its potential beef trade with China, but Brazil and India and Australia are all going through their separate issues. How is it impacting the global landscape?
Yeah, so I think in some ways it gives the United States some opportunities. When you look at India to start with, I'll say where we've been talking about potential bans to slaughter of cattle. Although not a very direct competitor to the United States, a number one market in terms of exports of product at over 2 million metric tons in some years. If that market were completely to go away, I think that provides the U.S. some opportunity to either get in higher valued markets that others are going to trade down to some of the markets that perhaps that Indian product was filling in the past. You know, Australia trying to recover from the drought, and I think we see much better pasture conditions there than we've seen for a while, but it takes a period of time before we're going to see a large amount of product moving from Australia. And of course, with what's going on in Brazil, with us banning imports of Brazilian beef due to some issues that we see there, as well as just the overall issues that we see with one of the large meat packers based out of Brazil, it kind of leaves in question where the Brazilians go as we look ahead as well. Again, an opportunity for the United States.
Well, I guess I should ask about the opportunity in China as we learn that Sonny Perdue will be there later this week to have the first American beef in about 13 or 14 years. How big of a deal is this?
So I think I take it in two steps. You know, number one, in the short term, I don't think we should expect large movements in U.S. cattle prices as a result of that Chinese market opening. We're likely going to get some lower valued products that will move into China from the United States. But for me, the key is longer term. When you look at an economy that's 1.2, 1.3 billion people with economic growth in excess of 5% a year, it tells me we have a subset of consumers are going to be demanding higher quality beef. And I think the United States seems well positioned to take some of that market as we move forward. And when I look, Jeff, ahead, for me, the growth in consumption is going to occur outside the United States, and a country like China, I think, is going to be critical. So keeping that market open and seeing it develop over time, I think spells a real positive for U.S. cattle producers.
We'll get something abnormal in July. That's an inventory report. Scott, what are you looking for from it?
Yeah, so I think given where we started 2017, we frankly haven't given strong signals to the cow-calf side of this industry to begin to slow. So although we don't have a point of comparison relative to 2016 since we didn't do a report in July of 2016, I think we're going to continue to see at least some positive in terms of beef cow numbers. I hope that rate of growth has been slowing. When you look at beef cow slaughter, we have been up for the year. However, when I look at the bred heifer side of the equation, it seems like to me there's still a lot of demand for bred heifers in the cattle industry. I expect we'll be up in terms of beef cows relative to what we think we had in 2016. And frankly, all the way to January of 2018, I think we're going to be talking about still more beef cows. And until we start to see lower prices, we're going to continue to see producers not really liquidating herds.
Well, finally, what is your price forecast here?
Well, I think there's certainly a lot more downside risk in these markets than upside potential. If you look how long it took us to really get back to fed cattle prices here for a minute of what were $1.45, no one thought we were going to talk about those kind of cattle prices in early 2017, and we've slid back down pretty quickly to maybe perhaps get below $1.20 here before long. I think as we go through the remainder of 2017, if we grow cattle weights and we continue to see cattle slaughter running at the rates that we have, we're going to continue to see some of that downside risk from just supply pressures on the market. And it's going to take a very substantial increase in U.S. beef exports, I think, to really offset what I see as more downside risks and upside potential at this point.